This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Yeah, welcome everyone, live another episode of Cycles TV, and I'm very happy to be here again after my vacation, so I needed to take some time off with my family as always during the summer period. So I'm back, I'm relaxed, and I'm really happy also to be here together with you in another live session. So I will monitor the chat section to this video, so feel free to drop in your questions. As always, latest at the end, we will dedicate some time to hopefully address your topics. So what's on the agenda today? As you've seen, I want to cover the gold and silver mining stocks and check the current status quo of the underlying cycles. I did this already here in the past on that channel. I also reviewed the gold to the gold ratio you have in mind, so the gold to gold minus ratio, also to see that the gold and silver price is more outperforming the miners. So maybe there at some point in time the miners need to get back to the performance of the raw gold and silver prices. So that's why also monitoring the activity on the mining sector or the mining companies related to gold and silver is interesting. And for sure, we are doing this in regards to cycle analysis. So therefore, that's the topic for today. That's where we will spend the next 20 minutes, 30 minutes. So let's see how time goes and what we find for conclusions on the chart. Right? So I would like drop me a note already today or now where you are from, what you're interested in, so then I have more kind of interaction with you already monitoring here. So at least it gives me a kind of sense we are alive and I'm not speaking just in the black screen. But anyhow, if you just want to listen, you're also welcome and happy to join. Let's jump to our cycle analyzer screen. What you will see, we will start with the weekly period. So I will first review the long-term perspective. I will start with the Silver Junior. I mean, this is kind of raw, only related silver ETF. So other ETFs is often a mixture of gold and silver. So the Silver Juniors, this is what I also learned from you out of the community, might give a better clue on raw silver mining stocks. So this is the current chart. And I will keep it to the basics to give you a kind of sense how to apply cycle analysis. At the bottom, we see the current spectrum of the weekly series of that chart. And on the right-hand side, we see the table view of that spectrum. What we're doing here is we check the spectrum for the most dominant cycles. This is what we're looking at. And for that, they need to have a special shape within the spectrum, which then allows us to pick that cycle. On the other hand, we have implemented some guiding features here at the foundation. So in the upper right, you will see some ranking IDs. So rank 1, rank 2. This is kind of guidance from the software. So if you have no clue how to read the spectrum here at the bottom, these numbers, these ranking score already apply what a human would do sitting in front of that screen. So you need to review in depth how to read a spectrum. I will keep it simple for today, but that's the way where the ranking mechanism already applies what is a good shape in that spectrum. In that case, what we are seeing here today, it is more kind of easy not easy guess, I mean easy analysis. So this is the most dominant peak here with the length of 214 weeks, just applying or analyzing the current past, now going back into, for the past 12, 15 years in the analysis. So 215 weeks, it shows up in the spectrum. It had, to the left and to the right, so the shoulder looks quite good. For that length, it's also a dominant peak, and the distance to the other peaks, which will follow here to the left, is quite significant. So, and there are no other peaks to the left or right. So I would call that a kind of easy spotting dominant cycle. You'll also see in that screen here, it's obvious. It's picked as the most dominant cycle also from our ranking engine. So the weekly one is a more or less easy one. That's anyhow, if you go back to April, that's also a reason why I brought that up already sometimes here on the channel. That's the weekly long-term cycle where we are in this upswing leg, which seems to still has time to run. I just need to repeat, if you're new to cycle analysis, we are using cycles to do time forecasting. We don't do any price predictions. So even if it looks aligned here from the low and the top in regards to the price, the cycle has no clue or no correlation to the price bottom or top. It's just a timing vehicle we are using here. And if I'm just talking about we have some time to go, you see the projected top from a timing point of view is, let's say first half of 2025. So that's why I told several times we are now in another upswing leg of the long-term cycle, in that case here for the silver miners, which has room to go to the upside. So we need to jump to the shorter time frame in a second, but that's the starting point. You could add more historical data, but there are reasons. I'm not doing that for now. It's another story which I will review. I have reviewed here on the channel quite often, so there's a reason to pick that. The cycles quite align, even if you would add more historical data. So just by following that dominant cycle, it looks quite easy. What I want to bring in today to add, so maybe something new, maybe you're aware of this long-term cycle anyhow, how to build composite models. I mean, this was just one cycle, but there is not just one cycle active. There are different cycles active at the same time. You see there are more peaks in the spectrum here at the bottom, so there might be another interesting cycle to pick. And one way, and that's something I want to bring in today, in addition to the basic procedure, there's always a harmonic relation of different cycles, or if there are harmonic relations of these kind of cycles, you should prefer harmonically related cycles if you want to build a composite model. So if you now want to stack up a second or a third cycle on top of the most dominant one, which gives you a better rhythm, or you fine-tune more the possible timing points of different turns, then instead of just looking at the absolute figures or the absolute shape in the spectrum, once you have a clear dominant cycle, which we obviously have here in that case, it often makes more sense to switch to the harmonic related cycles for the composite, instead just adding another one. So you could click just a cycle here from the mix and create a kind of composite, but often you just don't know what you're doing, and just adding additional cycles, it's like curve fitting. Yeah, I mean, for sure, you could add all 10 cycles just by the click on the mouse. And if you just look at the past behavior, oh wow, what a perfect match, right? But this is nothing more than just curve fitting in models for the past, which will give you no clue, no hint on the right part of the chart. But that's what we're looking for. So don't do overfitting. Don't just select cycles because, here's a cycle, there's a cycle. Makes no sense and will give you no meaningful value looking into the future. So don't do that. You need to find the dominant cycle first. This is what we're doing here on the channel always. And then the harmonic analysis is important. And we can bring this into the mix here by showing that module. I mean, it's nothing too special, but it shows you the harmonic relations of that cycle here at the lower right. I will explain that in a second. So first, let's hover over the cycle which we are interested in, which is the 214 week cycle. And now you see highlighted with these circles on top what other cycles of our spectrum analysis are in harmonic relation to that dominant cycle. And we apply harmonic factors of 3 and 2 or half and a third. So these two harmonic factors are listed here at the top. You can adjust this if you want other harmonics. And we allow 8% of deviation. So we don't want to be too exact from a mathematical point. If they are in a range of an 8% deviation, we would call it an harmonic relation. So, which brings us then to the 106 weeks cycle, which is listed here, and 67 week cycle. These two cycles are in harmonic relation with that dominant cycle. And if you just look in the table, the cycle with the length of 106 can be found here in the list, but you see it's not a specific or good cycle just looking at the raw figures of that cycle. So normally you would not pick that cycle for a projection because this cycle on its own, 106 weeks, does not look very good. So from that singular view on what you would need in a spectrum, you would skip the 106 weeks cycle. Right, and I mean, have a look at the figures here. So the Bartel score is very low, nothing important. The strength compared to the other cycles is very low. And just looking at the cycles spectrum here, that's the 106. It's not the best peak in the spectrum. So you see here down to the left, the shoulder to the left is not sharp enough to call this a perfect or good cycle on its own. So as I explained, and that's also the reason why it is not picked by the ranking mechanism on its own, because there's no specific indication that on its own is a good cycle. But once you have found the 214, you know that this cycle with 106 has an harmonic relation by a factor of 2 to that cycle. So, and due to that argument, it makes sense now to stack up the harmonically related cycles to build the composite model once you have the key dominant cycle. That's often more important if you want to have a second or third cycle into the mix than just the absolute figures building a composite. So let's do that now in our model here. That's the reason why I will pick the 106 week cycle and stack this up. To be honest, the 67, I mean, we could also add the 67, but I mean, let's do it just here, the 67 weeks here. It does not change it completely, but okay, let's add these 3 cycles. So the most dominant cycle and 2 harmonic related cycles shown by the harmonic analysis. This is now how the composite would look like. And you see also the small moves here. As said, don't look at the absolute price values, just the timing. So here a low, little top, and then here an interim low. That's what makes this harmonic relation so perfect. So that's what I said. You need to look out for the turns of that cycle, right? So here is an interim low, then here is an interim top, which you would have not spotted by just the dominant cycle. So the low, the top, and then into the low area. I mean, just from we have a smaller cycle, but that's then here the low, and then the big move up, and then here another interim low, that point, and here the double top, and then the major low here. So that's if you add harmonic relationships into the mix, it gives you a more fine-tuned alignment of the tops and bottoms. So, but let's zoom out again here. So and the overall picture gives you, at least if you just look at the worst case scenario, until end of the year, the upswing is still intact, and then at least from a topping point of view, anywhere between end of this year into summer, early summer next year, could be a double top, then early next year. That's the long-term perspective. And I bring this up just to repeat, we are still in a long upswing. Okay, so now we move to the next shorter time frame, which is the daily analysis. So therefore, let's do the same now to see where we are in the daily cycle. Just clean up the chart here. Yeah, technically, there's more to discuss, but let's keep it. Silver minus daily. I just need to cross-check that I'm on the right chart. So now, okay, zoom in a little bit better. That's how it looks like. That's today. And at the bottom we see the current spectrum now from the daily perspective. You see, that's not as easy as maybe on the weekly. The weekly was more clear and more easy to spot which cycle to look at. Here we need to spend a little time to discuss what's the most important dominant cycle. So let's discuss this for a second. So from the amplitude point of view, it would give you the 268 days cycle here. But however, it's not quite perfect due to the fact that the left shoulder of the peak in the spectrum is not really coming down. In an ideal perfect world, you will see this come down to the bottom of the spectrum and then moving up, which is not happening here. And even to the right side, we have a flat peak here, which would not qualify that as a very good cycle. And obviously, it's also ranked at the bottom of the cycles, which should pick here. Then here's the second one. Same criteria would apply. The right shoulder is not perfect, so it's light off. It's washed out here. Everything above 200. You could now add more data to the mix to identify if there are daily cycles in the range of 200 to 300 days. But just to detect if that length there, it would not help us to become clear on the phasing for that. So then let's continue what other cycles come into play. And then these three peaks would qualify better for the dominant cycles. So 92, 107, and 127. So these three look nice from just how they are, how their shape looks like in the spectrum. And now to derive which of these three want to pick, we should look at our additional parameters like Bartels value, which is statistical significance, or strength. So strength is a measurement of the impact of that cycle on price movements. And both of this information is shown in the spectrum. So here's the 107. So here we see Bartels score. It's very nice. Strengths also. So this is sorted by strengths. And by just using that three features here, this would then qualify the 107 days cycle here as top ranked cycle. So I just explained you why we are coming to this number here, and our ranking mechanism also picked that cycle. So out of these three cycles, it's obvious this cycle has the best Bartels score, the best strength score, and from an amplitude, it's anyhow above the other two ones here. So that's now the reasoning why, if you have a more depth look into that spectrum, the 107-day cycle is here the cycle which you start your analysis, and then we can apply the same harmonic analysis to stack up a second or third cycle to build a composite, or to see if the other cycles here have an harmonic relation to each other. So let's start with the 107-day cycle. Let's zoom out here, and this is now a shorter term cycle, but that's what we're looking for here in that kind of analysis. First, just from the long-term perspective, as said, do not look for the price alignments on that cycle. The cycle tops and bottoms are alignment in regards to timing, not in regards to price. So this is a good example we are looking here. So here's a top projected, but not the price. The price is here, but the relative performance is exactly from that cycle here seen. So here we have a relative top here. If you look to the left, to the right, this is a top, which is from a timing perspective what we have been looking here. This one is off, so they are not perfect, so we will have situations where the cycles are off, but in most cases they should be on. So this is what you can also check visually, but that's anyhow why the cycle shows up here. So now let's zoom in where we are today, and that's an interesting one. That's why I want to revisit that picture here together with you, because it looks like we have reached an interim or short-term topping situation here back in May, which would then expect a correction into the next 2 months, and therefore we should then add also the technical situation here. So you see this top was then confirmed by a breakdown below the upper channel of the cyclic RSI, and then something happened. Obviously, this down cycle did not work out completely. It turned, price turned, but then reversed, and this cycle has not come to a perfect swing here. So, it needs to be a little bit weighted, and I will address more and more topics here while we go on that stream. But one factor in cycle analysis you always should monitor is the concept of FLD, future line of demarcation, which is a very simple concept brought up by Hurst. And you can use this once you have found the dominant cycle, which here 107. You can add the FLD by just applying half of that cycle and shifting price forward. And then this FLD has a special reasoning, and that's just what I want to bring up here. So the down cycle, there are two ways to read that. The down cycle would only have been confirmed if price, so the dark blue line, would have crossed below that FLD. This would be the point in time when we had the confirmation that this expected cycle downswing is really in force. And if this would have happened, this would be a perfect confirmation of more downside pressure to come. But what you see here exactly at the point in time when price, not the point in time, when price reached the FLD, which is the green line here, it acted more as a line of resistance. So price pulled back from that price level. It's not a timing mechanism, it's a price mechanism where we look at the action of the current price. So this is nothing to do with timing. If the price, by breaking below the FLD, confirms that the FLD is in place, then we have a confirmation of price that that timing cycle is active. If it acts as a kind of resistance here, we have a non-confirmation, and this is what happened here. So this short-term cycle is not confirmed by current price action. So, that's the way to go. I just want to give you the perspective, what other measures you could use to confirm if a cycle, that's the earliest point in time to act on that cycle. It's always risky because you're kind of ahead of price. And then you need to monitor if you want to be on the safe side to act on cyclic projections, wait until price confirms by breaking through, or the other side breaking above the FLD. So then you have confirmation. You are late in that cycle, so there's not the amount of movement expected, because half of that movement happened again at that point in time. But the chance that this will continue for the final leg to continue are higher. So it's kind of risk management, at which point in time you will start to trust these kind of cycles on your own decision making. But here in that case, so for today, we don't have the confirmation that this short-term downswing is in place. What could this mean? So let's bring that out again to not disrupt this. So that's also now, let's add this harmonic analysis, which I showed you. Now let's use this on gold. I mean, we are running for 25 minutes. So that said, what could happen now here with the technical price situation we need to monitor? If the price now breaks again above the upper band, this would bring in positive momentum to the upside also. So it could be the case that even the longer term upswing cycle is still such strong in that market, which I showed you here on the long-term chart, so that this long-term cycle is in place, and the short-term cycle just acted for a short pullback, also from a technical point of view and timing point of view. But as the long-term cycle seems to overrule the short-term cycle, then maybe it is already, and maybe we see continuous upward momentum coming into play. And then the next point to watch out would be September. So once we align, and if July has passed, so if we also get into the upswing cycle of that short-term cycle here again, so maybe we need to closely monitor now, we need to closely monitor now what happens in July. But once in 2 weeks, when August now kicks in, where we anyhow had the next up leg of the short-term cycle, that would be interesting, as then the long-term cycle and the short-term cycle go in the same direction. So to the upside, we anyhow have a strong long-term cycle in place. We pulled back from the FLD, so we have no confirmation that the downward swing will continue. So this would anyhow be then interesting, maybe to position from August then into September, or as we know from the longer term cycle, even into end of the year, we have a lot of positive cyclic influence. Silver miners. Thanks for bringing in your questions, by the way, and I will get back to that at the end of my showcase here. So because I want to also add the gold miners now. So that was the silver miners. Now let's do the same procedure on the gold miners. This is the ETF for the gold miners, which I've just pulled in here. So let's analyze that first. We see same procedure. We see at the bottom the long-term cycles. Here in that case, 254 weeks, which is this cycle here. A similar picture as on the silver miners. So there's no other cycle in place. There are many more from the short-term perspective, but that's not as easy to choose. 245 also has very good Bartels and strength value, even better than the other one, which is listed here, but this one really has not good statistics in Bartels and strengths, and also the amplitude is much higher here. So that's the first one to go. And we know from the silver weekly, the long term was 214. So it's in a similar range, 250. You see also the long-term perspective lines up quite nicely. Again, just to mention it again, here that top you're seeing here is nicely aligned from a timing perspective, and it's a good example. These peaks do not tell you anything in regards to price movements or absolute price values. It's just relative values, and it is has been quite good high, and here nice low, like so here, and then topping here. So this is a cycle which is nicely aligned with the real performance. And also here, this cycle has a lot of room to go into early 2026. So we are in the very early stage here. So the gold miners has even more time to complete the long-term upswing cycle. Let's apply the same principles here in regards to harmonic analysis. So let's bring in the harmonics. Let's start with the 200. Let's hover over the, it makes this a little bit larger. So I'm hovering now 254 weeks. That's a long-term cycle. And you see the harmonic related cycle is 88, and I would assume this is an harmonic relation of 3. So multiply 88 by 3 and you will arrive approximately at 254. So, and that's the only, there's just one single cycle which seems to have an harmonic relation here in that case. And let's look at the table where we find the 88 week cycle. It's here. So just from the raw figures, you would not pick that cycle from an individual point of view. So it's not picked from the ranking mechanism. Let's look into the spectrum where the 88 is. It's here. So you see it's not obvious to pick this one here out of the spectrum, as there are many more green peaks in that range. But the harmonic relation reveals that this is an important cycle to pick it up here. So therefore, let's add the cycle with the length of 88 to that composite by a click. And now here we have the composite view. Let's zoom in a little bit. So it's not completely changing the overall perspective. So the key turns are still there. Yeah, you see a little bit here. So that's what you always have more fine-tuning. So here's an interim low or an interim top. This is what you will see at this kind of composite. And by the way, let me show you another feature we have here. If you want to see it more sharply, there is a possibility to, on the composite, to show it as a zigzag instead of these cyclic lines. So let me do it that way. And by showing the zigzag plot, you can better spot the exact turns. I mean, don't use that for timing. That's why I anyhow prefer the standard cyclic view. But you see here's an interim top and interim low, and here a topping process. So you see more clearly the turns due to the zigzag plot, or even call it a sideways moves here, which you see now from that zigzag move here. It gives you very nice alignment here of this perspective, bringing out that cyclic move. But that's just if you want to work with it, maybe spend some time to also have a look at the zigzag plot. But let's get back to the standard cycles view here. Because now there's another point to mention. Let's get back to the harmonic analysis, as I said. So 254 just revealed one harmonically related cycle. Now, if we hover over 88, which was the relation, now you see something interesting happening. So because the cycle with the length of 88 weeks has a harmonic relation to 174 weeks, so which has no harmonic relation to 254. But the cycle of 88 has two relations to higher cycles, 174 and 245. And the cycle with the length of 175 weeks has also a very good shape in the spectrum. So that would therefore qualify now as a third cycle to put into mix. So let's now add this 175 due to two reasons. One reason is it's anyhow picked as a key cycle, and as we use the 88, it has two harmonic relations to these 175 and 254. 254, sorry, I'm always mixing that up. So again, let's now how this composite looks like. Okay, so you see in the past this minor situations become a little bit clearer. Yeah, you see both interim lows here. So here's the low, here's the top. Yeah, you don't see this very nicely here, but here's the top, which is this interim top here, and then this interim low. And now this, and that's, I think, same procedure as we've seen on the silver miners. The minimum scenario is that even those 3 cycles, the upswing continuation into end of 2024 at least. So if you're looking into a bullish scenario, it should continue into minimum end of this year, and best case scenario into summer 2026. That's the long-term perspective. So it gives you a cleaner picture here. So, but anyhow, we're looking here, the upswing long-term cycle still has room to go to the upside. Gold miners, same picture as we had on the silver juniors. Let's do the same now. Last but not least, let's do the same now on the daily. Oh, I need to clean up my chart. You see, I've just yeah, but same procedure here. That's the daily analysis. I will do it quite quickly here. That's not a good cycle here. Too flat plateau. I think we have seen the same on the silver. Too flat. It's quite similar to the silver. So you can maybe, if you review the video, you can move back and forth. So these two don't qualify really nicely. So here we have 3. No, this also don't qualify here. So maybe these two would qualify. Yeah, these 2 picks here would work. 106, 127. So let's get back to silver. There was 107. So on gold daily, it would be 106. Yeah, and these 2 cycles would also be recommended by our ranking mechanism here. So maybe we need to check both of these short-term cycles here in that window. Let's do the 106. We have the similar situation here. So we indicated the top, then we pulled off that point here, and now we are reaching an interesting point. Let's bring in the FLD. 106, it's kind of 53. Okay, you see a similar perspective. Yeah, I mean, it's not easy to read, but it's more we pulled again back off that FLD, and anyhow, in order to confirm that downswing, we would need to pull back a lot here in a very short amount of time. So that would not be possible because we reach the bottom anyhow. So for that point of analysis, we are close to reaching non-confirmation of the short-term cycle. We had a short pullback, but latest here we should see continuation of price moving down to confirm that timing. It's not confirmed. So here again, the period of August looks for another upswing cycle, even though the downswing is not confirmed, which will then be in alignment to the larger upswing we are in. Let's do the same for the 127. Looks quite similar. So there's still some room to go to the downside, but we also have this upswing here. Let's adjust the FLD. We need to extend it a little bit here to 63, half of the dominant cycle. It's always what you use here. And you see we came close, but then pushed off or pulled off that line. I don't see it too hard at that exact value here, so it's more kind of range to expect even a crossing or a pullback. It's not the exact pricing. At least you need to have different mechanisms to validate that. It's a very simplistic view of an FLD here. Non-confirmation of the downswing. So you need to closely monitor more the technical conditions. So here we pulled above that. So now we need to monitor momentum on the short-term perspective. But that's a subject you need to review the technical chart now, how momentum behaves short-term. If momentum stays positive into August, then I think it would be a good situation to see the upswing to continue. Otherwise, we need to have a close look on momentum. Yeah, that's it for gold and silver mining stocks for the current analysis I want to bring in. At least that's the way how to apply cycle analysis, and I also wanted to bring in how to use harmonic ratios or harmonic analysis to get a clue once you have the dominant cycle, how to fine-tune your cyclic perspective coming into the future. So now let me spend some time to go through your questions as we are live. So I will now prepare my desk here, and then let me go through. Yeah, unvividet yet hard to pronounce, but at least I tried. We need to be careful here because this channel is for cycle analysis. So comment on incentives regardless of the cycles. So the fundamental topics on the miners. I'm not an expert in the fundamentals. I'm not an expert in incentives. So, and to be specific from a point of a cycle analysis, I don't care about news, about incentives, about business models. If cycles speak that way, that's why incentives or momentum will show up afterwards and not the other way around. I mean, this was a very extreme situation. That's nothing you can rely on as a trader. As a trader, you need to look at fundamentals, risk management, and use out there for sure. It influences the price action. I just want to say we are here for cycle analysis, and as I'm not an expert in that industry, I think it would not be of benefit for you if I would now comment on fundamentals. I mean, I could have a perspective, but I'm not an expert, so I don't want to waste your time with maybe wrong fundamental analysis. The only one comment I want to make, and that's also related to cycle analysis, if you look at this channel, I think a month ago I did review the gold to gold minus ratio. That's a kind of fundamental analysis, how the performance of gold or silver in relation to how the stocks, the mining stocks performed. And that's also a cyclic behavior. So if you see the metal going up and maybe the mining stocks, they're not coming up, they lag, and then they have a cyclic behavior around the fundamental incentives or price. So you can monitor cycles in regard to how the miners behave to the metal price. So that's a cyclic analysis on the fundamentals, how miners behave related to the price of the underlying metal. That analysis is here on the channel, and that's the only thing they are underperforming. So from that cyclic fundamental analysis of how miners perform compared to the underlying metal, there is a cycle which would require the miners to speed up with the increase of the price we saw. That's at least one answer or one fundamental perspective I could bring in. And please excuse if I don't want to comment on more on the fundamentals here. You had a second question, and yeah, for sure. I mean, that's the benefit of being live. Thanks for stressing that. So, big time of cycles work for indices and composite instruments. That's correct. That's most of the time we're using here. So your question, how about applying cycles to composite instruments likely dynamic allocated portfolios or rebalanced daily? So it's a very valid and good question here in that case. And let me start the answer with the cyclic behavior, which we might expect in financial assets, is best or can be best seen in averages of different industries. because if you analyze averages on industries or indices, then you will take out outliners or individual news-driven price movements. So, and if you are able to take out outliners or individual news-driven price movements, then you have a very low noise ratio. That's how we call it from an engineering perspective. So the indices, the big composite indices, have a lower noise ratio, as if you would analyze individual single assets. So that's one reason why at least you should always start with a broader picture. You can do cycle analysis for sure on individual instruments in your portfolio to rebalance all that. So, but if you view more specific instruments instead of the indices, you have the risk that you analyze a data series which has a higher noise ratio due to the fact that there are individual news-driven price movements in that series, which is a kind of random movement not caused by cycles. And the more possible random news-driven events might be in that series, the harder it will be to detect cycles in that series. So cycle analysis will get more and more complicated the more noise is in your data series. And if you drill down just to individual edges, for example, which have a very low volume, so they are not traded really often, and there's a very small market for these assets. So it's just driven by small news out there. So then you would have a hard time to identify cycles. However, the cycle analyzer will show a spectrum. So the mathematical point will show you cycles, but they could trick you because they are just wrong. And this is what you need to have in mind. And that's why, at least on that channel here, start with composites. If you analyze individual assets to rebalance a portfolio, be sure that the asset or individual stock you analyze has enough volume, or the market is big enough out there to really also detect cycles. Don't analyze small single stocks which just traded at the OTC counter or whatever. That's my comment. But yes, and rebalancing portfolio makes sense. So for example, how we use that cycles on the indices, you don't need, or at least nobody should trade cycles on its own. So you don't trade time, right? You trade price. So timing is just an additional information. But if you know from a timing perspective that you're in a downward cycle, you should rebalance the portfolio in regards to risk management. So if you are long an instrument, while the time cycle shows that you are on a downswing, maybe reduce that amount in your portfolio. You don't need to switch from long to short, but reduce your long position in that asset, while on the other side you could then stack up or extend the positions you have in long positions which are in a timing upswing cycle. That's how you could use the cycle analysis to rebalance your portfolio, not switching between short, long, these extremes, but managing risk, so reducing longs where the time cycle is against your position. I hope that helps a little. A short answer, so to not over stress your questions here. Yeah, I mean, not large language models, so but AI in general. So so I would be careful with applying LLMs here. But as you see with the ranking model, we are heading into that direction. I think in 10 years from now, 5 years from now, I don't know. Right? Today, we as humans sitting in front of that screen, the spectrum, making decisions which cycle to pick based on our experience, based on hard facts here. But it's always a manual process and knowledge. You have someone sitting in front of that screen. In the future, I think the reasoning for picking specific cycles, and we try to make it very, very specific here on that channel. So the reasons why a cycle is picked and why not, by the way, that's the main purpose we are here. We want to bring this knowledge across, could be taught or trained into a computer algorithm, which is then learning on its own. So it's using AI for picking specific cycles. I would not call it large language models, but we are working in that area. So I don't know when it will show up and will work, but we are working in that area. So yes, the direction you're also mentioning is valid. Slava, please make an additional video for picking the correct cycles. Yeah, maybe in one of the next weekly sessions, I should spend more time on that. In general, we always use the same procedure, picking the dominant cycle. In this episode, I did not spend much time. So it's about of looking at specific features like Bartel score, amplitude, and shape in the spectrum. But thanks for raising that. I think we should also make a special episode just dedicating that procedure. I will think about what's the best time to make that video. Justin, is this tool based on Elliott wave theory or something else? Total newbie here. So you're always welcome. That's why we're here. So this channel is for newbies or starters on cycle analysis. So welcome, Justin. And thanks for spending some time. The answer is no. What you've seen here has nothing to do with the Elliott wave pattern. We are not applying the Elliott wave count or the 1, 2, 3, 5 count and then deriving special patterns in this Elliott wave structure. It is something else, and the something else is detecting cyclics, so just cyclic behavior from a timing perspective, not from a price targets perspective, and it's kind of a dynamic cycle analysis. So we are not placing nominal static cycles models. This is more the Weyerhurst derived static cycles model, which you're then trying to fit into the current conditions. We are using what is happening in the financial assets, using digital signal processing with our tools. So this is what you have seen. We are applying digital signal processing, which is available today, which shows us the spectrum. Based on that, we then make decisions. What is the cyclic behavior we want to look for? And this is used for timing projections into the future. That's just the short answer. But you're welcome, and I would invite you. We are here once a week, same time, same place, exactly to learn on that subject. Also for all others which are new to cycle analysis, please join that channel, subscribe, like the channel, so you will always get notifications when we are here. But Tagli, was there a reason why you picked junior silver miners but large cap gold miners? Yes, there was a reason. And last time I did this, I used the large silver miners ETF, so SEL. But I then received the feedback out of the community that the large cap ETF is a little bit diluted by also gold mining stocks. So it's not a native silver analysis, because the large cap is a mixture of silver and other mining industries. And I learned out of the community that the junior silver miners is only silver. So if you want to analyze cycles, then the junior might be better shaped to just have a focus on silver and not get it mixed up with other metals, which might be in the large cap. And the gold large cap should be really focused on gold. So that's why I decided, let's use the junior silver, because it's only silver, or it's better only analyzing silver, as the silver miners large cap is diluted by other assets. And that's the reason. And that's also because some comments out of this community. So thanks for bringing that question up. It's important. Yeah, the German area, Deutscher Aktienindex. Not today. We don't have time for that. But also European assets in general, I should analyze. Thanks, MI, asking that, and I will similar to the reasoning how to pick cycles, we also need a dedicated session on DAX in the future. Is the CRSI crosses up from the lower bound, but price has not broken the FLD? Is there a confirmation? Or do you wait, confirm the move? Yeah, that's kind of now different conditions come into place time by time. So the most perfect situation is you have the turn on the cycle. The second is you see this confirmed by the cyclic RSI. So you have the technical condition confirmed by the either top or a bottom. And the third confirmation, which would come in, is the crossing of the FLE. And exactly this happens in time. First, you see the cycle. Second, you would see the technical confirmation on the CRSI. Third step is you have the confirmation of the crossing of the FLD line. And I mean, that's also kind of risk management. So if you just act on the first signal, like the theoretical cycle, that's the most risky decision you can make, because you don't have all these other confirmations. And on the other hand, if you wait until you have the FLD and CRSI in place, you have already missed half of the move. So you have a higher chance of the continuation of the move. So if you want to have a high probability for that trade, wait until FLD crossing took place. You have a higher probability, you have a lower risk of that trade, but also the expectation of the possible gain is lower in that case. So it's really kind of how comfortable you are at your decision-making process. All three signals in place is the most or the best signal you can wait for. However, your gain, or possible gain, will be lowered, while just jumping in on the first cyclic perspective has a high gain, so high risk, high gain. All three signals, low gain, low risk. And then in between, you need to choose. You asked for my recommendation. The FLD comes too late. So for me, or what we use, the FLD would be just a condition to stack up your position. So if you are in that move already, and I'm always waiting for the CRSI to confirm cyclic perspective, because that gives me time and price confirmation. Timing information from the cycle, CRSI gives me the technical confirmation, which is based on price. I think that's a fair balancing of that. Once then, and if you are in that move already and you see the FLD cross, and you can stack up the position you're already in. I would not open a position once the FLD crossing has happened. Most of the trade would have been done, be done already, or you're always late. That's at least the way how I do it, but there is not one right way. There are more ways to handle that. Natural gas, that's another topic for another session. Yes, and we are quite, I like what's happening in natural gas. We have this up move through 350, 320. Big up move, and the short-term cycle suggested a correction, which we are in. I mean, the swings are heavy to survive. But yeah, sorry for jumping on. Now, Dina, so we have DAX, we have natural gas, and we have explaining how to judge cycles. Okay, running for an hour. Thanks for joining me today. So let's close it. Let's call it a day. Let's call it a cycle analysis session. Thanks for joining me today. Thanks for your questions, and please join next week. So my holiday is now done. So you could expect me showing up each Monday from now onwards. So I will be here live for you out there and analyze cycles together with you. So thanks for joining me. Have a nice week out there, and hope to see you soon. Latest next